Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. So it was the return of macroeconomics. The market focus shifted back to what Fed Chair Powell had to say. It is testimony to the US House Financial Services Committee, and for us, four things stood out. First is that rate hikes are clearly on the way. Powell supported the idea of a quarter-point rise in policy rates at the March Fed meeting and a series of rate hikes thereafter. What I found most interesting, of course, is that given current market expectations are for about 5 rate hikes in 2022, Powell said that rate increases have already happened in effect and we have to ratify them. He did raise the possibility of using larger or more frequent rate moves if inflation doesn't slow, and he also discussed the possibility of taking policy rates beyond what he saw as a restrictive level if inflation did not slow sufficiently, though of course that is most probably not a debate for 2022. Powell said the Fed would also begin scaling back its balance sheet, saying the reduction will be conducted in a predictable manner. There were many questions about the war in Ukraine, of course, and Powell said that while Fed staff had begun analyzing different scenarios, the impact on the economy remained highly uncertain, and used the opportunity to say that the Fed will need to be nimble in responding to incoming data and events. So overall, there were few surprises. Our takeaway, of course, is that the Fed remains on course for a rate hiking cycle, largely as priced by the markets. The main focus is, of course, bringing inflation lower while being sufficiently responsive should inflation not ease as quickly as expected, or should the Ukraine conflict have a larger economic fallout. Now, the impact on markets was a relatively calming one. Before Powell's testimony, oil prices had risen sharply, putting downward pressure on equity markets in Asia. However, European and US equities later rebounded and government bond yields moved sharply higher, with markets clearly shrugging away risk aversion and focusing back on the economy and higher policy rates. Now, I wanted to point out that we recently upgraded the energy and financial sectors across the US, China, and Europe. And following Powell's testimony and higher oil prices, we can see some key drivers are starting to come together for these sectors. For the energy sector, even before oil prices surged, we were of the view that the equity sector had room to close the gap with oil prices. The rise in oil prices, of course, creates more potential upside here. For the financial sector, performance is, of course, usually positively correlated to higher interest rates and bond yields, so that links directly to what Powell had to say. In the US, of course, we also think the sector offers relative value. In Europe, we're seeing financials witnessing rising stock buybacks. And in China, of course, they should benefit from growth stabilization policies. So, two sector ideas we think follow directly off what Powell had to say and what we saw in oil markets. But finally and quickly, if you follow cryptocurrency markets, it might be worth following evolving EU policy closely as well. Several reports I read this morning noted that digital assets are becoming a focus because of concerns they could be used to circumvent Western financial sanctions on Russia. And though a similar debate is underway in the US and the UK, crypto exchanges, of course, said broad restrictions would run contrary to the ideology behind cryptocurrencies. So if it's an area you're invested in, something to watch closely in the coming days. If you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.